Good morning, everybody. Welcome back to another coffee hour. I hope you guys are surviving the bloodbath that is the stock market because it has been really, really bad. Luckily, we ended a little bit in the green. So we're going to be covering so much news. We are one day, let's see, today, I guess Eastern Standard is the 31st still. Tomorrow is April 1st, so that'll be April Fool's, and then we'll have Wednesday, which would be our Liberation Day, right? So we're going to be covering all the tariff news that's out there. We're going to be talking about a Goldman Sachs paper that came out, or post, or whatever you want to call it, some research that came out. And we'll be talking a little bit about AI, some Bitcoin, and some other news, right? And then we'll wrap it all up with a portfolio update. So I hope everyone's still surviving out there and not losing their heads, especially in the stock market. So without further ado, guys, let's just get into the video. Okay, so this is my portfolio today. So you guys will notice a couple things change. One, this is no longer $50,000 for obvious reasons, which I'm going to get into in a second. April income, I'm expecting about $3,000 worth of income. Currently, the portfolio is yielding about 12.87%. Okay, so had a substantial drop. Still down about, $30,000, which, give or take, is, pretty crappy, not going to lie. But we also have a couple positions. Well, we have one position that did change, which I'll get into pretty much at the end of the stream. But I did swap out a position, like I mentioned in my earlier videos, that I was going to sell. So right now I'm holding about 20,000 worth of cash, and I'm going to decide what to do with it. I might deploy it back into maybe an S&P 500 cover call ETF or something else. Haven't quite decided what I want to do. But gonna remain patient until about April 2nd to make any kind of move, because I don't want to make a move now and then the market continues trending downward, right? So I want to just take a kind of a little bit of a bet and just wait until after April 2nd, or maybe I'll do it on April 2nd, depending on when the actual tariff news is released, and then not only that, but how the market actually reacts. So let's get into our first piece of news, which is going to come from Seeking Alpha. NVIDIA backed CoreWeave given sharply divergent ratings by Seeking Alpha analysts. Okay, so again, with these analysts, they do good work. I'm not gonna sit here and say they don't do good work. I mean, obviously they if they have a huge following, they do put in a lot of hours to put in this work. So it is not an easy job. So I tip my hat to anyone who does financial analysis for a living. But there is a split for CoreWeave, because a lot of people can't agree. Oh, excuse me, I gotta get this light on. A lot of people can't agree whether CoreWeave is a good buy or a bad buy, right? That's basically it. CoreWeave, I covered on this channel. I said that CoreWeave is not really a company I'm going to be investing into, or really taking a look at right now, because there's still a lot of uncertainty for it. Which I'll get into just right now. Seeking Alpha analysts have given sharp divergent ratings to NVIDIA-backed CoreWeave, a provider of GPU infrastructure for AI development that went public Friday via a $1.5 billion initial public offering, IPO. Shares of CoreWeave were down 6% in afternoon trading on Monday, selling for $37.56 around 2:50 p.m. The stock closed flat on Friday at its IPO price of $40 a share. All right, so one thing about CoreWeave, well, I'm going to go over CoreWeave real fast. So CoreWeave, they're an NVIDIA-backed company, right? They have huge backing from not only NVIDIA, but also OpenAI, okay? And not only that, CoreWeave is offering a new type of data center. It's not going to be the traditional data center that we all know about. This is going to be a GPU-specific data center. So they're going to offer GPUs or GPU instances, which is a very niche thing. And not only that, the hardware that they're using is specifically from NVIDIA. It's going to be all of their, Blackwell chips and other types of hardware that NVIDIA offers. So recently, CoreWeave was in the news for a couple of different reasons, and it has a lot of people split, right? It has a lot of people split about whether this is a good company to invest into or not. Do they follow into the whole, AI bubble or data center bubble or what have you, right? So here's a couple facts about CoreWeave. So we do know when they came out, that they were their founders were actually selling a lot of shares. I think they sold somewhere like $500 million worth of their shares. I don't know the reason why. Nobody knows the reason why. I've searched all over YouTube, looked in all these articles. Nobody really covered why they were selling, right? If there was a reason, or if this was another kind of shady thing that they were doing, because they used to be an Ethereum miner, and then I guess they got into some type of thing with another company, and it just, it looked really bad. Another problem with CoreWeave right now is that, yes, they made a lot of money. They had, a couple $1 billion worth of revenue, but wait, is it a couple billion? I think it's $1 billion worth of revenue or something like that. But they had $832 million worth of expenses, right? And when this news hit, CoreWeave CEO, in Trader, I think, basically came out and said that, yes, data centers are CapEx heavy. You have to buy all the hardware, so that was, a reason, whether you like it or agree with it or don't agree with it, that's up to you. Another thing about CoreWeave is that they only have really one big customer, and that is Microsoft. Okay, Microsoft is their largest customer, and Microsoft recently said that they're going to scale back on their data center leases because, behind closed doors, OpenAI and Microsoft, they're having a little bit of a scuffle. OpenAI is basically saying that they want to build their own data centers, right? So Oracle and Microsoft are kind of upset about that, I'm sure, and it shows by them cutting some of the leases. But, analysts, pundits, everyone took this as horrible news for the data centers and saying that, oh, and this is, data center bubble and AI bubble and all this other stuff. Sure, there's some merit to that, but also, was it Google and Meta ended up picking up a portion of those leases that ended up getting canceled. And not only that, but OpenAI is working to build their own data centers. They're raising a whole bunch of cash. So if they do go through and build their own data centers, I mean, that was the reason. They were relying on Microsoft and Microsoft Azure in order to provide that infrastructure. But now, if they're going to build it themselves at a cost savings versus going with Microsoft, which is going to charge them an arm and a leg, then that makes perfect sense, right? So again, you have to kind of take this for what it is. For CoreWeave, they're still going to be, a partner with OpenAI. OpenAI just made a 12 or 11.2 or 11.8 billion dollar contract with CoreWeave to provide AI infrastructure. So again, is this a good company to invest into or not? I think personally, I'm going to wait a little while just to see how much, see how CoreWeave continues to operate over these next couple of months. I think it's too early. We might miss the, boat, and it might shoot up to $100 a share. Who knows? But because of the volatility in the markets right now, I can't see that happening. I'd probably bet that this stock is going to continue going lower. So that'll be at least my opinions about this, about CoreWeave. All right. So Trump is in the news. Obviously, we have Liberation Day just a few days away. And again, this is not to get political. This is not a political part or a channel or anything like that. But what we want to do is at least understand what's happening in politics so we could better position ourselves, better position our portfolios as investors. Okay. And sometimes, politics and money intersect, and it can turn ugly pretty quick. So love them, hate them, or indifferent, we still need to understand what's happening in the bigger picture to make some at least educated guesses. So Trump says reciprocal tariffs to target all countries. U.S. President Donald Trump on Sunday said that reciprocal tariffs he is set to announce this week will include all countries, and not just a smaller group of 10 to 15 nations. Okay, so we're seeing the evolution take place, and it's getting crazy. First, it was Canada. First it was Mexico and Canada. Then it was Mexico, Canada, and China. And now it's Mexico, Canada, China, and the EU. And now it's Mexico, Canada, China, the EU, and every nation that has a tariff on us, we're going to have reciprocal tariffs on them. Trump has also reportedly urged senior advisors to adopt a more aggressive stance on tariffs as they prepare for a major escalation in a global war or global trade war. The president has promised to unveil a massive tariff plan on Wednesday, which he has dubbed Liberation Day. So this is wild. This is absolutely wild. Uh, so Japan, South Korea, and one other country, Japan, South Korea, and there's one other Asian country I'm missing. But these three, and it's not China, these three are preparing their own tariffs, right? Their own reciprocal tariffs, or figuring out how to respond to these tariffs. So again, we are entering a trade war with the world. There's no doubt about it. We are entering a trade war with the world, and depending on what is announced on April 2nd is really going to determine what's going to happen with the market for probably the next 6 to 8 months. Okay, there's a lot of talk out there about recessions, a lot of talk out there about entering a bear market, for an extended period of time. There's a lot of talk saying that we're about to go bullish. There's some signs that support that. But I think right now, as we get closer to basically Liberation Day, the signs are pointing that we are headed probably for a recession. I don't think there's going to be a soft landing. I don't think there's going to be, I don't think there's going to be, a straight market reversal if April 2nd is worse than what analysts are thinking about, right? Because a lot of companies in the S&P 500, a lot of companies out there, they're waiting for the word on what the tariff will actually be. And this will help these companies kind of forecast their growth, forecast the cost, forecast everything into the future, knowing what, is actually going to be, hit with a tariff. So by understanding that, all these companies can react, and all these companies can better, react to what's going on. Shannon Tom says dip got bought up quick today. Absolutely. Senpai Steve says strategy over spreadsheets. Hey, appreciate it, man. Thank you. Yeah, that earthquake was crazy, man. But anyways, maybe I'll cover that a little more at the end, because I was seeing a couple more videos. But anyways, let me get back to this, and we'll talk about that more at the end. Good to have you guys back, and again, welcome to the stream, and I hope you guys had a great weekend. So NASDAQ, S&P, and Dow fall shortly as tariff uncertainty sparks volatility. All right, we already know this. We survived today into Monday. We made it another day. All right, we're ready to fight for another day. So this leads me into this. Goldman Sachs projects 3 U.S. I can't speak today. Goldman Sachs projects 3 U.S. rate cuts in 2025, ups recession's probability to 35%. All right, this came out, and this was making its ways all throughout YouTube and all throughout the finance news space. Goldman Sachs economists raised their forecast for Federal Reserve interest rates cuts to 3 this year, and increased the probability of a U.S. recession to 35% as President Donald Trump's tariffs put pressure on economic growth. Goldman had previously forecasted only 2 rate cuts this year. So just real fast, whenever Goldman Sachs says something, this is a large institution, okay? All the large institutions are publishing their own forecasts. You have Vanguard, Fidelity, Goldman Sachs, Bank of America, you have JP Morgan, you have all these asset managers out there publishing their own papers, talking about probabilities, talking about these things. And whenever they speak, you do want to at least pay attention to what they're saying. Are you going to be affected tomorrow, and should you just sell everything tomorrow? No, but you should at least listen to what they have to say, so you can take that as a data point, so you can, again, position yourself. Right now, I'm again holding close to $20,000 in cash, and I really want to wait until about April 2nd to deploy that. If this recession hits hard, kind of forecast in your own mind what that could look like. I was looking back at the stock market during CV19, during the vid, or the Rona, whatever you want to call it, and it dropped 30%. Throughout the last trade war that happened back in 2018, the market dropped, I think it was like between 10 and 12%. So ask yourself, if your portfolio actually dropped a substantial amount, and think about it, 10, 15%, and as high as 20 to 25%, would you be okay? That is a question that I ask myself, especially as a person that has a lot of margin on their portfolio. So I ask myself, am I comfortable with that amount of risk, right? is the juice worth the squeeze? Because I'm making right now about $3,000 a month on paper, right, from dividend income. But is that really worth it if the portfolio drops so badly that I get margin called and have to sell at a loss? Or if it's an extended bear period, an extended recession, and the market just stays in the bloody red, how am I going to react? How am I going to do? So you got to run these scenarios kind of in your mind to really, think about what your future plan could look like, especially if you're probably, a little older, probably closing to retirement, things like that. You probably want to start thinking a little more strategically like that, because not everything is all roses and rainbows. This is serious. This could really, we could have a bear market all of 2025, right? We could probably not see a recovery until 2026. So again, you have to ask yourself, asset allocation, diversification, your risk tolerance. If you're taking on excessive margin, maybe this might not be a good time to do that. Maybe you should start paying some of that down. All these things, you should really just take that into consideration, is all I'm saying. All right, Goldman Sachs economists raised their forecast for Federal Reserve interest rate cuts to 3 this year and increased their probability of a U.S. recession to 35% as President Donald Trump's tariffs put pressure on economic growth. We continue to believe, and this is Goldman Sachs, the risk from April 2 tariffs is greater than many market participants have previously assumed, economists led by Jan Hatzius wrote in a note on Sunday. The economist said they see the Federal Reserve reducing rates in July, September, and November, up from their previous projections of 2 rate cuts this year. All right, Goldman also increased its 12-month recession probability to 35% from 20%, pointing to soft data such as a sharp deterioration in household and business confidence and slowing in real economic growth. The investment bank raises forecast of core PCE inflation this year to 3.5%, reduced its GDP growth projection to 1% on a Q4 basis, and increase its outlook for 2025 U.S. employment to 4.5%. So there's a lot to unpack here. Again, these are just forecasts, is what they think is going to happen. We all like in the finance space, we're all pretty much under the assumption that, the Fed was going to cut rates at least twice this year, at a minimum, at least twice this year. And let's see. Yeah. So Citizen of the Year says, I'm selling it all to go all in XPay and msty. That's what I'm doing. Shannon Thomas says, is the sound robotic to anyone else or just me? I hope it's not just you, man, because this would really suck. I might have to fix some of my my freaking streaming settings, or maybe I just sound like a robot. I don't know. But anyways. Yeah, this again, this is not good. But this is just a forecast. This is that I have to hit that point home. This is just a forecast. Don't freak out. Don't start selling everything. Definitely don't just sell out and move to XPay and msty, or just sell out and move to bonds. Instead, what I'm doing right now is trying to hold on to as much cash as possible, because if we continue to dip further into the red, I think it would present some very attractive buying opportunities. If we see a rise in unemployment, and maybe this 4.5% is because, again, the Fed has said that, between 4 and 5% is healthy for an economy. So unemployment to 4.5% is not that bad, but if we see it continue to raise and, jobs are not being created and things of that sort, yeah, that would start to look like we're heading or already in a recession, So again, we just have to be patient, keep your eyes, keep your job, save some money, all that good stuff, all that personal finance good stuff, have money available, especially if you want to be a market participant, especially if you want to be able to take advantage of opportunities as they arise. All right, so Cerberus, I looked at this earlier. This is basically NVIDIA's biggest competitor right now. And Cerberus, AI chip maker Cerberus announces CFIUS, I forget what that stands for, clearance. They're basically trying to get clearance to go for an IPO. And they're being backed by a big company, which I'll get to here in a second, a key step towards IPO. The AI chip maker or developer, Cerberus, said Monday that it has obtained clearance from a U.S. committee to sell shares to Group 42, a Microsoft-backed AI company based in the UAE. That clearance came from the Committee on Foreign Investments in the United States, or Committee for Investment in the US, I guess, and it's a key step for Cerberus in its efforts to go public. So artificial intelligence chip maker developer Cerberus said Monday that it has obtained clearance from a U.S. committee to sell shares to Group 42, a Microsoft-backed AI company based in the UAE. That clearance came from a Committee on Foreign Investment in the United States, or CFIUS, and it's key step for Cerberus in its efforts to go public. Cerberus competes with NVIDIA, whose graphic processor units are the industry's choice for training and running AI models, but most of its revenue comes from a customer called Group 42. Group 42 is basically the company that's backed in the UAE, but it has a lot of ties to China, and of course the United States is not very friendly to China right now, especially when it comes to chips. We're trying to degrade their ability. We're trying to box them in and keep them from, increasing their AI market share, essentially. The U.S. has right now a grip on AI and a grip on AI chips. So they're just trying to stifle China's growth in that market. But yeah, I thought it was just an interesting thing because I saw Cerberus come up before. And, it was around the same time that I started looking at CoreWeave. But Cerberus looks like it's a way more responsible company. So I'm going to just, again, keep my eye on this. If I see more news about Cerberus, I'll bring it up in future streams, or maybe I'll just do a whole video about them. I think they could be a definite competitor to NVIDIA. Left to be seen if, they'll take away market share, because again, now you have some other competitors in the space and some more prominent competitors like AMD. All right. AMD is still, I still think they're years away from developing any type of actual technology that's going to be able to compete with NVIDIA. But that's not to say that they can't acquire other companies to make that happen, which they just did. They ended up buying a company recently. And that company is supposed to help them, develop hardware and more software for data centers, specifically for AI, training AI, inferencing AI models. So the race, between all these chip makers is definitely heating up. So our boy Michael Saylor is in the news. All right. Our boy Michael Saylor is in the news. He bought another $1.9 billion worth of Bitcoin. Michael Saylor's strategy bought 22,000 Bitcoin for nearly $2 billion, despite concerns over Trump's April 2 tariff announcement and rising market uncertainty. I don't know if he has some insider information or something, but this guy's just been buying so much freaking Bitcoin. It's ridiculous. Michael Saylor's strategy bought nearly $2 billion worth of Bitcoin, taking advantage of a recent price dip, despite growing market concerns tied to the U.S. President Donald Trump's upcoming tariff announcement. Strategy, formerly MicroStrategy, acquired 22,000 Bitcoin for $1.92 billion at an average price of 86 or close to $87,000 per Bitcoin. The company now holds over 528,000 Bitcoin, acquired for $35.63 billion at an average price or cost basis of $67,458. So Saylor made a post. msty is basically just saying what I just said. But this is absolutely crazy. And I'm going to tell you why I think this is absolutely asinine that this guy is continuing to buy Bitcoin. You guys who know who Satoshi Nakamoto is, he's, or it's the group or the name synonymous with Bitcoin, right? The creator of Bitcoin. This group or this individual owns 968,000 Bitcoin. MSTR strategy, Michael Saylor, now own a little bit more than half of that. So that is absolutely crazy that they are competing really now with the owner or the creator of Bitcoin. So I just had to point that out because that was just funny that this, Michael Saylor has just been on a buying spree. And this also, because I talked about this before, that there was this letter between Strategy and Coinbase that was going to, I thought it was the Secretary of Treasury, but I guess it's the IRS, basically asking for a tax exemption on unrealized gains. So MicroStrategy may owe taxes on unrealized Bitcoin gains. I thought this would have been settled by now, but apparently it's not. Despite never selling any Bitcoin, Strategy may have to pay taxes on its unrealized gain of over $7.7 billion, which had previously soared to $19 billion at the end of January. Cointelegraph reported the firm may have to pay federal income taxes on its unrealized gains according to the Inflation Reduction Act of 2022. The act establishes a corporate alternative minimum tax under which Strategy would qualify for a 15% 20% tax rate based on the adjusted version of the company's earnings, according to the January 24 report from the Wall Street Journal. Still, the U.S. Internal Revenue Service may create an exemption for Bitcoin under Trump's more friendly, crypto-friendly administration. So again, this is crazy. Because I mentioned at one point in one of my videos that took a lot of heat, that if this actually comes to pass, Strategy would have to sell a lot of their Bitcoin. And depending on the price of when they sell, that I think would be a catalyst for creating some ripples in the crypto space, specifically for Bitcoin, right? Well, also, not only that, Strategy doesn't make any actual money. Like, they don't make any money from their software services. Their software business is basically defunct. It's, trash. They lost money year over year. They're not really seeing any real meaningful gains there. So really, it's just a shell company at this point. And if they're not making money, right, and Saylor is using all these different tactics and ways to raise money through Strike, through Strife, through convertible debt, and then now you have the BMAX ETF, so all these other ways to raise money and make money to buy more Bitcoin. Well, where's the money going to come from to pay these taxes? $7.7 billion worth of gains, right? So, well, now it's 19 billion. So where's all this money going to come from? He's going to have to sell Bitcoin in order to pay that tax bill. So again, because Trump's in power, Trump's, running the administration, hopefully there's something that comes out to, provide that exemption, especially since, the whole crypto summit and all that other stuff happened and Saylor was there for that. So probably there will be some type of exemption. But if not, this could be one of those catalysts that lead to a Bitcoin winter or crypto winter or some type of huge drawdown, in my opinion. All right. So we'll see what comes of this. I just like to cover, whenever I see Strategy or Michael Saylor in the news, I like to just include a bit because, there's people out there, love him or hate him. He is involved in the crypto space. There's a lot of people who invest in MSTR or, the yieldmax equivalent of msty. And I think, this is at least a data point to keep in the back of your mind, because if this comes to pass and he ends up paying all these taxes, MSTR's price is probably going to tank, in my opinion. All right. So just moving on, OpenAI closes $40 billion round in funding, largest private tech deal on record. This is putting them right behind SpaceX. So OpenAI on Monday announced that it closed what amounts to the largest private tech funding on record. I hope this company freaking IPOs at some point in the future. The $40 billion financing values the ChatGPT maker at $300 billion, including fresh capital. It's nearly 3 times the amount previously raised by a private tech company, according to PitchBook. The valuation puts OpenAI behind only SpaceX at $350 billion, and even with TikTok parent ByteDance among the world's most richly valued private companies. OpenAI said it plans to use fresh capital to push the frontiers of AI research even further and scale its compute infrastructure. This is the key words right here. Scale its compute infrastructure. That means they're going to be building their own data centers. All right. So there's all this. Again, I covered this earlier on the stream that, the whole kind of rift that Microsoft is having with OpenAI is that OpenAI wants to build their own data centers. And Microsoft canceled a bunch of leases with data centers, which caused a ripple effect and basically a spook, the entire market, saying, oh, there's a data center bubble. Microsoft pulling out. That means there's an oversupply of data centers. Sure. If that's what you believe, that's what you believe. But again, if you dig a little bit deeper, you would know that OpenAI basically is looking to build their own stuff. All right. So about $18 billion of the funding is expected to be used for OpenAI's commitment to Stargate. The person familiar with the matter told CNBC the joint venture between SoftBank, OpenAI, and Oracle was announced by President Donald Trump in January. So Stargate project, it's a $500 billion partnership to basically build, invest, research, development for AI infrastructure, etc. All right, so that was pretty much it. Sam Altman wrote on Monday in a post that though the ChatGPT launch was one of the craziest viral moments he'd ever seen, they added 1 million users in 5 days, and the company added another $1 million in the 1 million users in the last hour. The generative AI market is poised to top $1 trillion in revenue within a decade. Companies from Google, Amazon to Anthropic and Perplexity are racing to announce new products and features, especially as the race to build AI agents intensifies. So AI agents or agentic AI, I think they're synonymous. I haven't even done my research between these two, but basically we're moving from like chatbots, right? Basically chatbots to AI agents that can think and reason for themselves. They can come to their own decisions themselves, which is kind of scary when you think about it, but that is where AI is moving to now, where AI agents can basically, provide deeper research, actual reasoning, give you probably actual real answers, and not just kind of the coin stuff that you put when you put into like a ChatGPT prompt or something like that. It just kind of spits out what you would like expect, but now it's going to be able to think a little more deeper than that and use reasoning to come to a solution and an answer for you. So I think that's really, really cool. Okay, moving on. Can't end this portion of the stream without talking about Tesla. Tesla plunges 36% in the first quarter, worst performance for any period since 2022. All right, so again, I tip my hat to anyone who's holding Tesla stock in any way, shape, or form, because Tesla stock is just wild. It's absolutely crazy. Tesla stock just wrapped up its worst quarter since 2022 and suffered its third steepest drop in the company's 15 years on the public market. Shares of the electric vehicle market plunged 36% in the first 3 months of the year in 2025. All right, this is what we're talking about right now. The last time Tesla had its worst stretch was at the end of 2022 when the stock cratered 54%. So it gets kind of more into the political side, basically our boy Elon over here, running Doge, and, there's vandalism and basically domestic terrorist acts against dealerships, cars, and king of Teslas and all this other stuff. And President Trump tried to buy a Tesla to, show support. Yeah, anyone who's holding Tesla stock, again, I tip my hat to you. The volatility for Tesla is ridiculous. I never bought into the stock. I don't think I could buy into the stock. If you hold it, I hope you have some diamond hands. So I'll just leave it at that. This week we have some news coming out, and this is going to be something I cover on the stream after it happens. So this week's major U.S. economic reports and Fed speakers, the ones I really want to pay attention to is going to be when Jerome Powell speaks on Friday, April 4th. So this will be after the tariffs. He's not going to talk about interest rates or anything like that, or dropping interest rate. He's just going to be speaking, which I like to listen in and kind of get his point of view, get what's happening at the Fed, because that is important. These other highlighted items, you have the initial jobless claims coming April 3rd. Right now we're forecasting for 226,000, which is cool. If that goes higher, then that will obviously be bad. For Friday, April 4th, we have the U.S. unemployment rate and employment rate, again, 140,000 and 4.1%. So if these raise, then that will be a problem as well. So interested to see what Jerome Powell has to say come Friday. And again, I will cover it on the stream at some point. So let me just get a sip of coffee because my throat is freaking dry right now. I've been smoking too many cigars. All right. Yeah, sorry about that, about the mic. I'm going to have to be a little more cognizant about the mic and the direction it's pointing in. So appreciate that, Steven. What BDCs do you like? So I have a ton of BDCs. Well, not a ton. I have like about 10 positions, if I remember correctly. SLRC is probably my top pick, but I also have things like Main and Gain. But I just don't want to buy any of these BDCs right now at these prices because I think they're really rich right now. If you look at their moving averages, I mean, I don't see a dip in these things. And then especially if you're, collecting dividends and things like that, I don't know. I honestly want to sell my BDCs. There was one commenter on one of my videos that said I should just buy PBDC, which is an ETF. I've looked at BIZD, BIZD is the ticker. I think that's from Global X or VanEck. And it's just a BDC ETF that pays like a 10% yield. But I like the fact that I can control the yield. artificially when you invest in individual stocks like BDCs. So you can pick and choose kind of the best in breed BDC and then kind of artificially create your own yield. You know, if you, I'm not saying filter by highest yield and then pick the highest yielding BDCs. I'm saying buy the BDC that is, you know, really good. Again, I don't really know how to analyze BDCs because you have to really look at how much, like, what are they loaning out to? Like, who are they loaning out to for how much? How much are those loans defaulting? I mean, it's pretty deep research. And I really rely on just seeking alpha analysts whenever I look at my BDCs. That's why I don't want to touch BDCs anymore because it's too much. And yeah, I'm just not putting any money into them. But yeah, I'll show you a list of the BDCs I have at the end of the stream. All right, so real quick, we'll go through the market. We'll do a portfolio dive in, and then we'll wrap up the stream. So S&P 500 up 55 basis points for the day. We ended in the green. Thankfully, we ended in the green. NASDAQ, not so lucky. They're about a 0.5 or 0.05% in the red. So not much, but they did recover from the earlier day. In the earlier day, it was a bloodbath. Like, man, I was actually like, shit, this is so bad. And it's only going to get worse. But we ended in the green. But I think this is just a pump until April 2nd. And then, you know, once April 2nd comes, it'll either be a massive dump or a continued, you know, I heard one YouTuber talking about a W like shaped recovery. So could it be a W-shaped recovery? I don't know. FunStrat's Tom Lee, who's been, you know, pumping out videos on CNBC, has been just bullish this whole time, saying that we've already hit the market bottom and it's all, you know, green skies from here. I don't know what the truth is. I don't know what the answer is. Bitcoin didn't end very well. They were up to, I think, $85,000 a coin, and then they started dropping over the weekend. So yeah, over 5 days, yeah, Friday, and then they just kind of been continuously dropping. So Michael Saylor bought, I think it was like sometime on Sunday. So yeah, he got in at a good price, especially when Bitcoin dropped. So, you know, shout out to him, good for him. Gold, still the best performing asset year to date, up to 17.35%. $3,132, what is it, ounce, I think, which is ridiculous. All right, so gold has just been on a tear. There are some people who've been talking about buying gold ETFs, not gold ETFs like GLD, but leveraged gold ETFs, like 3x levered gold ETFs. And I think yieldmax also has something out there for gold. I haven't really looked into them. I think it's a gold miners ETF, which isn't really the same, but yeah, with gold, you know, this, again, I've been covering gold since the start of the year and just been talking about how it keeps going up. And this is a clear sign that investors are spooked and scared of a potential recession. They're moving to a safer asset. You would have thought that, you know, bonds would have been doing really well, but no, gold is doing really well. A lot of investors are buying gold. So again, you use this as a barometer to really understand what the market is thinking, and it's true. You know, the market is really fearful of a recession or some large catalyst that's going to drive the markets down. So they're flocking to equities. The US 10-year Treasury, again, barometer for real estate mortgages and real estate market, specifically the REIT market, is actually down, which is very surprising because, you know, this has been going up because of the tariff scares. And I was really surprised to check today that it's actually down to 4.2%. So that is a welcome sign. Again, as always, as this continues to go lower, REITs will recover, mortgages will get cheaper, and this will be good for the real estate market because people will be able to refinance their debt into lower interest rates. And that is exactly what I am hoping for because I have a lot of money tied up in real estate and I would love a cash out refi so I can get the money out. For VNQ, the Vanguard Real Estate Index that we follow, up in the green, 93 basis points, almost a full percentage point. I was worried for a bit because I saw this dip and I was like, man, REITs are not safe from this sell-off either. But it looks like we did pretty well. So happy about that. So I'm not going to cover this, but it was just something I saw. Why U.S. multifamily investors may win amid looming tariffs. So we talked about this on one of the streams before about how multifamily, because it's one of my biggest holdings in my REIT portfolio, multifamily is basically your apartment complexes. And the biggest deal with this is that if these tariffs are going to put, tariffs on steel and building material like wood and things like that, it's going to cost more to build a home. It's going to cost more to bring units online. Back in, 2020, 2021, when not only interest rates were low, but everything was relatively cheaper, there was a lot of development that went on in the United States. A lot of new apartment units came up. A lot of new apartment units were being built. So now with tariffs, that's putting a lot of downward pressure on home builders and developers, right? So current operating multifamily apartments could have a huge tailwind from these tariffs. And again, I have a huge sizable portion allocated to multifamily apartments. And not only that, I'm actually invested in a few apartment buildings myself. So this is obviously welcome news. And, I'm hoping that the interest rates will continue going lower so that we can refinance and get the money out of those projects. So that is that about that. All right, real quick, let's check the poll. So, do you believe a recession is more likely after hearing about the Goldman Sachs Economic Outlook post? And 83% of you say no, and 17% of you say yes. So, I'm of the camp, I'm going to agree with the no, that I don't think there is a recession looming. We saw from the AAII that over the next 6 months, investor sentiment is rather bullish. Will that change? I have no idea. But I don't think we're going to hit a very prolonged deep recession. I think there will be some pain ahead, but I don't think there will be an actual recession. So we'll see. How do you have apartment buildings living so far away? So I invest in something called real estate syndications, which maybe I'll cover on one of these streams one day, or maybe I'll cover it in a video. But basically the real estate syndication is you have to be an accredited investor or you have to know someone who's on the team. And basically these general partners, these real estate syndication companies, what they do is they raise a bunch of money from investors and they go out and purchase a building, right? Let's say an apartment complex. The largest one I'm invested in is in Texas, and it's 375 units, if I'm not mistaken. So you basically invest your money in there. The GPs are going to operate the day-to-day, execute on the business plan, do whatever it is that they're supposed to do according to the offering memorandum, and then you as an investor, you're known as what's known as a limited partner. So you bring the capital, you bring the capital, and you, just like a dividend, you collect, either monthly or quarterly, dividends. And that's basically, you're a real estate investor. So it's very passive. It's one way to invest in real estate that not a whole lot of people really cover. I like it because I used to invest in, single family homes, small little duplexes, triplexes, that kind of thing. But there's so much stress with that. And as I found out through this whole ordeal with rising interest rates, investing in syndications can be just as stressful, even though you're completely passive. Which is why I'm really, really like REITs. REITs are by far the most liquid, easily accessible. You click and buy and sell at a button. And not only that, they're very transparent. They have to be. So I like REITs. I can go more into the syndication stuff, maybe in another stream. Maybe I'll make it all about that. Let's see. So what kind of returns do you get on that? They vary. They're not all the same, and they're just mostly projections. I'll have to cover that in a different stream or something. But yeah, basically whenever you're investing in these apartment buildings or these syndications, usually there's a couple different ratios. You have an equity ratio, or equity multiple, excuse me. You have an equity multiple. You have cash on cash return. You have, what else you have? An IRR, an ARR, after or annual rate of return, internal rate of return. So you have all these different metrics. The one I just keep an eye on is the equity multiple, because that'll basically just give you at a high level what you can expect on your money. So if there's an equity multiple of 1.5, and let's say they require a $50,000 minimum investment, then you can expect 1.5 of your money, right, on your money. So about $75,000, right, when the project comes to completion. And the project can be, either 1 to 3 years or 2 to 5 years or 3 to 7 years, right? It all kind of depends on the project, on the sponsor, on the business plan, what they hope to do, right? So you got to take all this into consideration. I've seen projects require like $25,000 minimums. And again, you have to either be what's known as a accredited investor, which they have their own requirements per, I think, the SEC. Yeah, the SEC puts an actual definition on this. You have to make you have to have a net worth of $1 million, not including your primary residence, or you have to make $200,000 consecutively over 2 years with the expectation to make it in the current year, right? So I fit, the latter of that. I was making a little over 200K per year, plus with my rentals, that put me over. But with there's also syndications out there called 506Bs, and these 506Bs, they allow non-accredited investors into their pool. But you have to know somebody. You have to be you have to have like an existing relationship. And those minimums can vary between 25 to, I saw some as high as 100,000. And I saw some as high as 500,000, right? So it really, really depends who you're going through, who you're working with. The returns, again, they can vary from project to project, but the risks are the same as if you're investing into a rental property, right? You can run, even though an apartment might have like 50 units, if the sponsor, the management are complete garbage and they suck, they can completely squander your entire investment, right? You can actually go to zero in these investments. So you have to be really, really careful. I am a part of a project right now that, not any fault of the actual sponsors, but more fault of the macro environment and what's been going on in that local market. I could see a total loss of all my money, but right now they're working with, local county to do some type of thing called the HFC, which I can get deep into this, but your money can go to zero in these projects. So you have to be really, really careful when you do consider these. Shannon Thomas asks, how are you worried about Tesla volatility, but use margin in times of people talking about recession? I don't know, man. I think that's a great question. I think the answer, honestly, because it's because I'm a real estate investor. I've invested in real estate. So it's like when you take on real estate debt, right? You're taking on financing mortgages. It's just like whatever. To you, it's like whatever. I don't know. For me, I never really blinked twice whenever at one point I was, I think like $500,000 in debt because of the mortgages I had. And it never dawned on me. I was never really worried about it. So taking on margin, I kind of look at it as the same. And I mean, for the most part, a good bulk of my margin was actually invested in real estate. So it is what it is. But the margin you see on Robinhood, I mean, that's invested into, stocks and crap like that. I'm more worried about that because the drops can be faster. The drops can be much faster, but I'm not worried like in terms of like investing in Tesla. Because I don't know. I can't invest in Tesla. It's not that I don't believe in the company, and I don't think I don't know. I'm of the camp that don't bet against Tesla. They usually always win. They always usually come out ahead. And not only that, but they're involved in so many different projects. They have their own data center. they're building their own robots. They have their own robotics division. They have their battery technology. They have their autonomous driving technology. They have their Tesla cars, right? They have their charging station, all this stuff. They have all this stuff going for them, which would be seen as good. But the story right now, the narrative fighting against Tesla is always news driven. It's always freaking news driven. It's always Elon Musk tweeting something stupid or a part of something he shouldn't be, or doing something that's just viewed very negatively in the media. And then in my opinion, right, in my experience, every time I saw Tesla's share price go down dramatically, it's always been news driven. I don't know. That's just my thoughts on that. Let me get a portfolio update here. Okay, so here's the portfolio today. I sold out of the Ethereum cover call ETF. I can't deal with cover call ETFs for crypto coins anymore. I don't think I'll ever invest in those ETF instruments ever again, to be perfectly honest. I just don't want to deal with cryptocurrency stuff. I'd rather just invest into something like IBIT, the Bitcoin trust from iShares. I'd rather just invest. If I'm going to even open a position in Ethereum, I'll just do the same thing. I'll just invest into an Ethereum ETF. If I want to invest in any of these other altcoins, shit coins, meme coins, then, you know, like, I, I don't know why, like XRP is not a shit coin or altcoin, or I mean a meme coin in any, you know, in my opinion. I think XRP has probably the most utility out of most, you know, compared to most coins. But you know, XRP is the only coin I'm going to hold outside of an ETF, right? And this is more or less play money. I think I dropped like $900 into this, and I was just like, whatever. I uninstalled the Robinhood app after that. I was like, I don't want to even look at it. I'll wait until it reaches, you know, $10 or $100 a coin, and then I'll sell. But you know, those are hoop dreams. But anyways, yes, I sold out of the Ethereum cover call ETF. I sold at a loss. Let's see if I can pull it up here. Yes. So yeah, this was the sell order, and it was basically I sold at a $3,000 loss after the dividend has been taken into account. So kind of a shitty thing to go through, but again, you know, with this whole talk of crypto winter and you know what's going on in the news, I don't want to hold an Ethereum cover call ETF. If we look right here, you see that Ethereum is down quite a bit, 45% year to date. And if we zoom out from its peak, it is actually down 53, I think it was 50, closer to 58%. So almost, well, 55%. So almost 60% of its value has been wiped out in just a span of a couple of months. Will it recover? I have no idea. Will it go lower? I have no idea. Is there a bull run over the horizon for Ethereum? I have no idea. If there is, and you get in right now at these prices, congratulations. I just don't want to deal with it, right? Especially if there is a bull run, you know, cover call ETS on Ethereum, they're going to be capped on the gain, right? So you're not really going to make any appreciation there. You'll make money on the dividend, but I mean, what the hell's the point? In my opinion, what the hell's the point if you're missing out on way more gain? So that is why I just got out of it. I don't want to even deal with it. So that's just my thoughts on the whole Ethereum cover call ETF. Let's see what else we got. XDT, XPay, still the same. PLTW, NVW, which is Palantir and NVIDIA, 1.2x leverage ETF with income option. So these two are obviously taking a beating. Palantir and NVIDIA, that, you know, AI stocks, defense AI stocks, and they're just taking a shit beating with the rest of the market. I'm thinking honestly of putting money into XDte, putting the remainder of my money into XDT. So I have about $22,000. I'm going to turn these on. I was collecting the dividend and not using it, but just collecting the dividend, and made some stupid buying choices and lost some of the money. So I'm not doing that anymore. Just going to put the drip on and just let these drip and dollar cost average where I can. But you know, I'm sitting on $22,000 worth of cash. Again, I'm very low risk when it comes to the whole margin call thing, so I'm not worried there. I'm thinking about either using this money and putting it back into XDTE, just so I can juice up the return a little bit. Alternatively, I could wait to find another ETF that I really like and then put the money there. I'm going to be doing a video on how much dividend income I actually made for the month of March, which, you know, just, I mean, right off the top, it was close to like, I think $4,600, give or take, about $4,600. So, I mean, it was a lot of cash, but, you know, you still have to pay margin off. So that is what it is. So yeah, that's that for the Robinhood portfolio. Let's take a quick look at the core portfolio. Oh, shit. Hold up. Wait a minute. Okay, there we go. Okay, so got some dividend income. That's always nice. This portfolio has obviously been taking a beating, you know, just with the rest of the market, but the REITs have actually been outperforming technology, which is, you know, kind of funny because that almost never really happens. I'm expecting a huge turnaround for REITs this year. I really think this year I'm finally going to be back deep in the green. At one point, this portfolio was about $230,000 with all the gains. You know, that was like back in September before, you know, the 10-year started rising, and then that just caused a huge sell-off from the REIT market. For technology, still down quite a bit, $25,000. I mean, that's really kind of scary. BDCs, I know System of the Year had asked, so these are the BDCs I'm invested into. Let's see. Shannon asks, how much do you pay to repay margin? How does that work? Let me, I'll cover that real quick. But yeah, these are the BDCs, SLRC, Ares Capital, Blackstone Secured Lending. I wanted to put more money into Blackstone's secured lending, but I just didn't have the cash available. But this is probably one of my bigger holdings. I like Blackstone. I like what they do, and I mean, they're I don't know, the elephant or the gorilla in the room. I mean, they're big. Blackstone, BlackRock, massive footprint in the world on the global stage too. And not only in the financial space. Golub Capital, Main Gain, CSW, and Triple Point Venture. Triple Point Venture is the one that's down the most. You would think this would make a prime opportunity to invest in Triple Point Venture. I'm just holding it for right now. Like I said, I'm not putting any real new money into this portfolio. I did put the most money into SLRC. I'll just cover this real fast. So SLRC again it's a BDC. They loan out money to higher risk businesses. These businesses can't qualify for loans from a bank, so they go to these companies, these BDCs for that loan. So right now it's providing almost a 10% yield on its money, so that's really good. Market cap's just shy under $1 billion. But yeah, that's SLR Investment Corp, SLRC. Let's see what else we got. Yeah, I mean, these are the typical names you'll see, Ares Capital, Main Gain. I saw CSWC being or some videos being popped out about CSWC some months ago. I think the YouTuber's Dividend Bull, I think he's covered most of these. So Dividend Bull, he does a lot of high yield investing, but not into the yieldmax stuff. But he does a lot of BDC investing or mREITs. So I would recommend people check him out. He's got an excellent channel as well. That name again is Dividend Bull. So back to the portfolio. Again, nothing out of the ordinary here. Crypto ETF, like I said, is just Bitcoin. If I want to invest into Ethereum, I'll probably open an Ethereum position at some point in the future. Again, I don't want to deal with keys. I don't want to deal with wallets. I don't want to deal with any of that crap. I'd rather just put it into ETF, call it a day. And then, of course, the company, former employer, so I just keep one share available because I want to make sure that they're providing me shareholder value. So other than that, guys, I think that's going to do it for this stream. Let me answer Shannon's last question. How do you repay margin? So in Robinhood, whenever you get paid a dividend, it's automatically allocated to margin, which I think is kind of shitty. Because in M1 Finance, it's completely different. In M1 Finance, you actually pay the bill, right? You can pay the bill. So if you get a dividend, it's not just put into margin, right? Instead, it's put into its own cash account. And then you can use money from that cash account to pay down the margin, right? Whatever that bill is, or if you want to add more, you can do that. If you miss your margin payments, what Robinhood and M1 Finance will do is they'll just sell your shares for you, right? Make it really easy for you. They'll just share the shares for you. So if you owe, let's say $300, they will just sell a couple of your shares that equal up to $300, because they're such nice people. So yeah, that is basically how you repay margin. Robinhood, M1 Finance, two completely different brokerages, two different ways of how margin works, and two different ways of how you repay margin. Interactive brokers, IBKR, interactive brokers, they have a whole different system as well. You have Webull, completely different system. Fidelity, I don't even know if Vanguard allows it. I don't know if Vanguard allows it. I know Fidelity does. Schwab, same thing, right? So you have different brokerages. If you want to know how to use margin, you should either read through their website or call their customer service or interact with their customer service somehow to actually understand how margin works. What are the interest rates on that margin? Because you don't want to get screwed and go with one of the big names and then end up paying 10% on your margin when Robinhood offers it for 5.25%, depending on how much margin you use. And then if you have Robinhood Gold. M1 Finance, in my opinion, has, some of the better rates without having to pay for a subscription, but it also depends on how much money you're putting into M1 Finance. Robinhood, Robinhood, M1 Finance, first, second place, but yeah, Robinhood has also been very good with offering cheaper interest rates, and those interest rates go in tandem with the federal funds rate. So if the Fed lowers their interest rates, so will interest rates on Robinhood and M1 Finance. So, I'm always hoping for lower interest rates because that's just going to lower the bill. And the beauty of margin is that there's no repayment schedule for most brokerages I know of. There's no repayment schedule, so you don't, have to pay all your margin by this date, so you can almost indefinitely keep the margin, on your account forever, right? You could just keep, accruing dividends, buying more shares, creating yourself, more margin, right? Or if your shares appreciate in value, you could take out more margin, right? You could do that. It's not recommended, of course, and I wouldn't recommend anyone follow exactly what I'm doing and taking out this much margin at all. But, it is something to know about, because I thought you had to pay margin off by a certain date. That would have, if that was a thing, I would have never taken out any margin. But right now in the current day, you don't have to pay your margin back, on a schedule. So you can have your margin for as long as you freaking live, as long as you have the account open, and as long as you don't get margin called. So, a lot of rich people, they do something similar to this. It's not called margin in their world. The really wealthy, they do what's called, security backed line of credits, or they'll do, loans against their assets. So this is essentially what we're doing. We're taking a loan against our asset to buy more assets. There's something called the buy, borrow, die strategy. Whether you think or believe that only wealthy, super rich people need to do that, you decide on that. But Elon Musk, I really drew inspiration from Elon Musk when I decided to do margin, and this was years ago. Elon Musk bought Twitter basically with margin. He took a loan out against his shares at Tesla through other banks as collateral, right? He used his Tesla shares as collateral, and then he used that money in tandem with other money that he raised, and then bought Twitter, right? And then turned it into X. So if the rich people can do it, then why the hell can't we? And this is how margin came to be used. So be responsible. It is a loaded gun. Don't just use it and shoot it in any direction. Don't just, sort by highest yielding investment and then buy. And then obviously when you do decide, if you do decide to use margin, make sure you understand the maintenance requirements for your holdings. Because if we look at like xdte, you're getting a masterclass in margin. But if we look at xdte, you'll see that this maintenance requirement is on M1 Finance is 25%. There are some that is high as 75 and 100%, and they're different from broker to broker. So xdte right here on Robinhood is 25%, but on M1 Finance it's 45%, right? So the brokerage sets the requirement. And if you're to buy a bunch of 100%, investments and then take margin, if those investments fall by a little bit, you're going to get margin calls. So you got to be really, really careful. So Shan says you can't keep any of the dividend until it's paid. No, you keep the dividend, because in Robinhood you can do what's called I think it's margin spend. So I could actually transfer $22,000 off Robinhood into my bank account and then use that money for whatever I want to do. So on M1 Finance it's called borrow. So you could borrow against your assets and move that money off and purchase, or move it to your bank account and purchase whatever you want to do. So I know of which is crazy, but I know there's financial planners and financial certified financial whatever people you want to call, that were recommending, instead of taking a loan, instead of borrowing money from a bank to purchase a rental property or purchase housing, take a loan against your assets. You get a way better interest rate and you don't have to pay it back. So when I heard that, I was blown away that if certified financial planners and analysts and things like that are actually advising that, that tells me that that is a good strategy that I was already implementing far beyond, or way before that even came up. So, I just thought that was interesting is what I'm saying. That's it. I just thought that was really interesting. M2 says, pew pew, NAV down 60%. Oof. Oof. That's all I gotta say, man. Steve says on Robinhood you can either withdraw your dividend, but if you use your divs to invest, it doubles with Marge. Yep, there we go. And Marge is a harsh mistress. All right, if you owe her money, she's gonna call you day, night, and if you don't pay, she'll just sell your shares. All right, so be respectful of margin and how you use it. It is a loaded gun. All right, guys, we are at the top of the hour. I think that's going to do it for me. I have to get ready. And again, I appreciate you guys checking in on me, when this whole Thailand earthquake stuff happened. That shit was absolutely scary. There's so many videos out there on YouTube now of other YouTubers who went through a similar thing. And it was freaking brutal. Luckily my condo did not get there's no cracks on the walls or anything, right? I had a couple like paint chippings here and there, but nothing bad. But I saw some other condos in Bangkok that were like cracked down the middle. You could almost fit, like 2 quarters in between the cracks. When the cracks are that bad, I'm moving the hell out. And a lot of these people, a lot of these expats, a lot of people who are renting these condos out in Bangkok, they're moving out because they don't feel safe. There's freaking rafters missing. There's exposed wiring, plumbing burst, pipes broke. I mean, it's bad. And luckily, we were far away enough that it didn't affect us as much, but it was still scary as shit. Like even last night, when it was almost like a PTSD moment, and I know I'm not trying to make a big deal of an earthquake. Like it's an earthquake, like it's over with, get over it, right? But when I heard this like noise in the hallway, it was like something shaking, right? It was basically a cart, like a food cart, but it was shaking. And that was the same noise I heard right before the earthquake started happening, right? So like I instantly like woke up and I'm like scared shitless. I'm like, oh, not again, right? Like I'm about to go grab my go bag and get the hell out of the condo. But yeah, when that happened, man, like it was scary as hell. Like to see a building sway like back and forth, scary as shit. Like really, really scary. And I know I'm cussing a lot, so I apologize, but it was scary. Like I don't care. There was one person, and bless her heart, I don't mean any ill will or anything like this towards her. But she was coming back and she was like, oh, I'm from California, I know earthquakes. I don't know if you were up, 27 or 50 floors, but I don't care where you're from. I'm from California myself, and I never felt some shit like this. I was never that scared. And a lot of people are still feeling the effects after the fact. There's a couple, expats within my community, well, not mine, but the community I'm a part of, they just dipped. Like they're just like, you know what, Thailand, I'm over with, I'm leaving, right? Some people moved from Bangkok to Pattaya and Phuket, and they're moving away and out of these large scale condos because it was that terrifying. There was one building that, the sky bridges basically split in half, and those bridges it's gonna take a long time to get those back online. Steven says, "What time to move to Vietnam?" I've never been to Vietnam, man. I love pho. I wish when I was working, I wish I did stop by Vietnam. I could stop by there now, but I don't know. I'm kind of a homebody now. But I always wanted to go to Vietnam. I hear, obviously it's just as affordable as Thailand. I don't know of any like cities. Everyone always talks about Ho Chi Minh being like a really good young like poppin' city, but I never been. But yeah, maybe one day in the future I'll go. I am trying to plan a little stop down in Bali, maybe for like a week or so, just to get away for a bit, get away from Thailand. Like the air quality out here gets really bad in the first couple of months because it's burning season. And it's kind of, I'm not gonna lie, it's kind of shitty. Like just walk outside and you just see clouds, right? And you think like, oh, it's foggy outside. No, that's bad air quality. So it's kind of shitty whenever I walk to the gym and I have to wear a mask and it's like blazing hot outside. M2 says, I wonder if you were all right after I heard about the earthquake. Like, hey, I appreciate that, M2. I really do. And again, really appreciate everybody who checked on me because we've never met other than YouTube and live streams, and for people to be reaching out to me and just check on me, I mean, that brought a little tear to my eye, not to sound, kind of pansy-ish, but it is what it is, man. Like, man, I had friends that didn't even know the earthquake happened until like 2 days after, and they're like, yo, are you okay? And I'm like, bro, we've been childhood friends and you're checking on me like now? Like, Jesus. No, but I mean, I still love them, of course. Cali doesn't get crazy earthquakes like that. Yeah, it was a 7.7 magnitude earthquake. It was the largest I think ever recorded here in Thailand, and it affected Myanmar, and we just got the after effect. But Myanmar got hit worse. Like you see videos of Myanmar, you have whole buildings collapsing. You have some of their most famous, beautiful temples collapsing, which is really sad in itself because a lot of these temples out here in Thailand, like they're they're beautiful, they're gorgeous, and they've been around for, you know, years and years and years. And these are very holy sites, and these things are now just toppled over, which is really, really sad. But yeah, Myanmar got hit worse in Thailand. Thailand, we had, you know, a building collapse that was being constructed, and now that company that was constructing that building is under investigation, and they already like arrested all the people, probably because they're using cheap material, or they did something really that they weren't supposed to, because there was other buildings in the area that were still being built that didn't suffer the same fate. Thankfully. There was a crane that also fell, and that was really sad, because in the video you can see the driver of that crane basically fly out of his box. So that was really sad to see. But anyways, I'm planning to retire in Vietnam once I'm confident in my portfolio. Hell yeah. Like, dude, I think people, I don't want to sound like a passport bro, but I think more and more people are starting to realize, like, the United States is not where it's at anymore. It costs so much. Everything's fucking expensive. And you can get a better quality of life for half the money outside of the United States. Thailand is great for healthcare. It's up and coming. You know, people, you know, you can get excellent healthcare here. The hospitals are grade A quality. Outside the United States, you know, you have like pharmacies at every corner. Even in the Middle East, when I was working in the Middle East, you know, you have pharmacies that will sell you antibiotics or freaking fat loss pills, or, you know, actual fat loss pills, or even steroids. I know there's one country, I won't mention the country, but there was one country where you could buy basically whatever that Adderall. You could buy Adderall, right, without a prescription. You just walked into the pharmacy like at 7-Eleven, just said, I want some Adderall, and they'd hand it right to you. So everything outside the United States is just quicker and easier, in my opinion, of course. So yeah, I just think people are starting to realize, like, you know, the Philippines, Vietnam, Asia, Thailand are just, you know, where it's at, you know. And I know there's one person in the chat who's, you know, very leaning towards, you know, the Central and South American countries. And yeah, I mean, even those countries, you know, they're definitely way cheaper than America. Let's see. Yeah, see, I was from California. Well, I left when I was much younger, but yeah, California is freaking expensive. Yeah, California is really, really expensive. And it's even worse now. Like, $1 million will barely get you like a 2-bedroom house. M2 asks, how are the women in Thailand? Gotta make sure my wife can't hear me, but beautiful, gorgeous. All right, they are very, very kind. You got to be careful though, of course, just like anywhere else. They can give you a run for your money. But no, they, like, Thai people in general are very kind. They're very nice, very kind. I don't know, like, I haven't dated in the United States in a long time. I can only tell you from what I know from YouTube and the whole red pill space and the manosphere space. But I will say that, you know, if you watch some of those Passport Bro videos, you know, they do nail it right on the head. They nail it right on the head about women outside of Western countries and how they act and how they are. You know, some people think that's absolute bullshit and it's not real. And, you know, it's just a bunch of old guys who can't get women in the United States, and they move out to Asia to get these women who are poor, and they're taking advantage of them. I mean, you be the judge. You be the judge. If you're kind-hearted and you meet a kind-hearted woman, I mean, what's there to hate, right? Nicaragua, yeah. See, I've never been there. The farthest I've been was Costa Rica. I do like cigars from Nicaragua though. I will say that Nicaraguan leaf is my favorite freaking leaf. If I could order cigars here, I definitely would. Cigars from Nicaragua is definitely my blend. Whether it's the filler, whether it's the binder, or whether it's the outer wrapping, just any cigar with Nicaraguan leaf is my preferred. So shout out to you, JV. Thanks for showing up. Yeah, I know it's bad, M2. Like, I know it's bad over there. I visited last year in August, and I remember me and my friends were ordering just like some Chipotle burritos. We ordered 2 Chipotle burritos, just 2, off Uber Eats. The shit was $75. $75. To drive there and pick it up was like 20 something. I was like, man, what the hell? What the hell? Talabat, which is Uber Eats in the Middle East. Talabat, you can order basically Chipotle burritos with delivery fee and tip for about 20 to 25 bucks. Like, that is ridiculous, right? That is crazy. And even here in Thailand, they have something called Grab, and Grab is basically the Uber, Eats of over here. And you can order a whole freaking dinner, you could meal, whatever, for something like, $7 to $10. So, and that's including the tip. And I mean, I always tip the drivers because it is pretty dangerous out here. And it's even worse in the Middle East because, especially during the summer months, it's really shitty. And these guys are driving their bikes with helmets and jackets on because they're not trying to get burned up. But yeah, man, my heart goes out to those guys. So, I always try to tip as best I can. Yeah, but shoot. Anyways, gentlemen, ladies, if there are any, probably mostly men in here, appreciate you guys showing up and kicking it with me and watching the stream. I got to get my day started. I got to hit the gym and I got to go check out a couple places. But other than that, I appreciate you guys showing up, showing some love, checking in on me. And, I hope you guys survive these next couple of days. Let's see what April 2nd brings about because it's going to be very intense. So other than that, I will see you guys in the next stream. Enjoy the rest of your night. Have a good evening. Take care.